Hello, traders. It's 8:02 a.m. Chicago time on Monday, the 19th of October, 2020. This is episode number 1861. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Looking at the markets, we've gapped up in the indices overnight on the reopen and are holding pretty strong. We are in the S&Ps. We are inside of the value area of Friday. We've basically discounted that entire sell-off that occurred on the close or in the later hours on Friday afternoon. The leader today is the NASDAQ, up 105 points or 0.88%. Trading at 11,902. The S&P is up 24.5 points, again gapping up from the close, but really still in range of Friday, taking back a lot of the sell-off. The Russell's up 10.1 points or 0.62%. The Euro is stronger today. The Dow is up 147. The DAX is a laggard today, down 53.5 points or 0.41%. The dollar's off as well. The bonds down 19 ticks. Crude is down 11 ticks or 11 cents at 41.01. And the 10-year note's down 6.5 big ticks. So this is where we stand today. Looking at the overall picture, early voting has started in Florida and several other states, and things are starting to heat up for this election. If you're eligible to vote, I strongly encourage you to vote whichever side you lean on. It doesn't matter. Hopefully, you will take the time to cast your vote, make your voice heard. U.S. stock index futures climbed as remarks from House Speaker Nancy Pelosi revived bets that a coronavirus relief bill was imminent. European stocks rallied after upbeat quarterly results by top companies. Asian equities ended in the green on hopes of coronavirus vaccine by the end of the year, though China's weaker than expected GDP data kept gains in check. A weaker dollar pushed gold prices higher. Oil prices fell over as concerns over rising coronavirus cases globally dampened prospects for a quick demand recovery. And then we have IBM. In after the close today. IBM announces its earnings after market at 4 p.m. Central, 10 Eastern, expecting $2.58 in EPS and 17.54 in revenue. So that's where we stand this morning. Let's take a look at what was expected on Friday versus what we got in our review segment. Actually, in terms of what's ahead today, really we do have Fed's Powell has been speaking for about an hour. And Lagarde has been, ECB's President Lagarde started speaking about 20 minutes ago. Fed's Williams. Currently, we do get NAHB housing market at 10, half hour after the open. BOE has a couple of speakers. Fed's Clarita at 11:45. Fed's Bostic at 2:20. And Fed's Harker at 3. Fed Parade continues. These guys really are out there. Putting themselves out there and talking a lot. This evening at 9:30, we get China's loan prime rate expected to hold steady at 3.85%. In terms of what was expected on Friday, the primary expectation is a dip down, and then a continuation higher. The reason being the run-up on Friday gave us a lower high continuation of the one-time framing down, but the overnight session showed that the one-time framing had ended with a pretty stable low there at 70.75. So 70.75 is relatively weak, but The market was pushing highs right around the open. The expectation is that the overnight inventory would likely bounce out into 81 and then turn back up and start pushing towards the high volume node at 3504. That's the primary scenario. Did not work out that way. Secondary pushed the high immediately into 94, then sell off into 71, the 70 71 area to poke and then take out that weak low and then finish somewhere in the middle. Here's what actually happened. We had a very quiet open, completely sideways for about the first 20 minutes, and we finally poke through, make an attempt to close the gap zone. We opened in a gap on Friday, made an attempt to close the gap zone to 81, got to 83.50, and then immediately one impulse, two impulses, and then it was done on the upside. So remember, we're looking for 35.04 on the upside on scenario 1 on a grind up, and 93 on a test in scenario 2 before the drop. This thing blew through both of those. Really a relatively odd push higher, putting in, confirming that higher high, the end of one time framing down on the daily. The weekly one time framing up continues, so the weekly trend continues to be bullish. Daily trend was bearish, and I'll go over that, and it had stopped on Friday. So the expectation was for us to get to this 3504 area. Anyway, we pushed to the 3508 half, fall back into the middle, and then we have this relatively consistent sell-off on the close, just completely pushing down. Did not foresee that at all, and the market closed at its lows. We do have a poke of the high, and we do have a break of the low, and what this is it's a neutral extreme down, type of close, and generally, if it hadn't been Friday, generally we would expect the market to continue lower. Expect the market to get down into balance at the 34.55 again, and 34.60, the MC point of control in this area. But instead, it opened higher. The overnight low, as you can see here, stepped up 34.70 and a quarter. If you recall, the low on Friday morning U.S. time was 34.70 and a quarter as well. So we have a market that's kind of retested that low area. There's a 34.70. This is today's low right here, and we had poked through, gapped up, and really held the VWAP all the way up until now. Relatively bullish. Looks like a P-shaped profile in the overnight session. Volume is really anemic. 166,000 is pretty low for this product these days, and we are holding Friday's value area pretty well. The overnight session is holding Friday's value area, and we're holding steady. This is setting us up for a relatively, in my opinion, most likely a pretty boring or slow or choppy morning today. So what we garner from this information is that this impulse is incomplete. The push up is incomplete. You would expect the market to extend up to find sellers as opposed to breaking at the high here. We have a relatively weak high on the order flow. We see a lot of volume up here that got tested and retested before the sell-off, and so as it holds steady here, we have what looks like an excess low on Friday. It looks like the market's rejecting that low on Friday and continuing to hold the bullish tone from Friday's break higher. So that's what we're looking at. I want to spend a second here on the composite. The composite continues with its higher weekly lows. Higher low, higher low, higher low. This is one time framing higher on the weekly. The daily, as of last Monday, we put in that gap and push, and then we had an inside day and we broke that low, and that's what gave us the opportunity for a short back into 34.74. That was really important on the test down. And then we gap open on Thursday way down into the next gap and close. But during this period after we put in the high, the next day confirms one time framing down, and that continues on the daily. And we had basically contradicting time frames. So weekly pushing up, daily pushing down. But then on Friday, we did put in a higher. We did break the high, and we put in a higher low. The expectation is this low is likely to hold, and this is likely to target 35.14 relatively quickly. I'm expecting the market to push to 35.14 at some point this week, probably earlier in the week. And so that's where we stand. The delta keeps pushing up day on day. The delta keeps pushing up despite the selling. There appears to be, I don't know, but it appears to be accumulation on the way down. The market is supporting these lower prices by buying them up, by lifting the offer. And so we have this pretty decent delta going since the low was put in, 4 weeks ago. Okay, so this is the bigger picture. The high remains in range, 35.76.75, really well within a week's range currently, and it's just the market's really looking for an excuse to turn around and really get up there. So 35.14 is one to keep an eye on, and of course keep an eye on your weekly time frame lows. 34.31.50 is important, and then Friday's low also comes into play. We need to pay attention to how the market treats that. Friday's low is 61 and a quarter. Okay, so that's that. Let's take a look at Bookmap, CT Bookmap here. Come on. Come on. This thing is really choking. Looks like, yeah, very slow. CT Bookmap, if we just move out a little bit, we see how that spike was formed, and this is delta right here, just pure positive delta. You can see the CVD increasing quite a bit, and collisions on the way up, pretty big dots there, and we come into this liquidity that stalls us out, and then we have a nice little retest into that liquidity area. Let me just pull that up. Pretty decent retest and fail kind of structure here. A nice scalp short off of the upper zipper here, and the liquidity at 97 remains intact still. And so we start to roll over, and then we see an acceleration down. Really a quite orderly overnight session. We keep shifting this point of control down. This is the point of control here for the session, and you can see it's stair-stepping down and kind of following price around, telling us that there's a very active price discovery. The problem here is the volume's still pretty light. 168,000 is relatively light. I'm looking for a choppy open as a result. You can see the profile on the left has got a lot of kind of discovery areas, a lot of high volume nodes, and to me this looks a lot like it is likely to just chop on the open. Not much to say about the liquidity As I zoom out, there's a lot more on the offer than the bid. As you can see, 34.80 has a little bit of a bid, but much of the darker colors, the reds and so on, are above us. We'll see if the market turns up, but overall, not really, not really expecting too much. Now, I said that last Monday, and we ended up with a gap and go situation. It ended up pushing quite a bit, but that was also a bank holiday. And we just kind of blew right through all expectations in terms of a holiday Monday, which is normally a super boring trade. But last Monday really pushed pretty strong. So, what are we looking for today? Let's organize here. Stock zones are up, and so for today, so you can see how the structure has been playing out last week, just kind of weakening through, right? Just where the peak of Monday, overnight, overnight, and moving down. We broke that on Friday. We broke this trend on Friday, and now we are balancing out. So, what are we looking for today? Let's extend this a little bit. Today, we're opening in range, in value with a point of control above. I'm looking for an open auction that is likely to respond. We have overnight inventory that's 100% long, expecting it to respond lower, likely to push into 34, 80, 81, looking for an impulse higher at some point, and for it to check that 96 area above the point of control of Friday and hold steady here. Again, not expecting more than 14 to 16 points of range today. If we get that, so around 80, 81 to around 96, 96, 81. That's what I'm looking for today, plus or minus, a couple of points, whatever that is. The secondary, and just pay attention to news flow. The secondary holds steady, pushes into 96, pokes through, gets to 95, pulls back into the range, and then starts to test down towards the break point. The break point of Friday left some single prints down at 83 even or so. If we get below 83 even after testing up, remember when we test up and we turn around, especially with impulses, and we break the singles, we are likely to see ourselves going down the flagpole, going down this thin range and retesting it. Low probability, but I'm still open to the idea that this may fall through. Remember, we are opening in range of Friday. We're opening in value, and I'm expecting it to hold steady in this today, probably rest, and then continue higher to continue the trend tomorrow. To continue the weekly trend and redefining the daily trend and start one time framing back up into 35.14. Remember the big target above 35.14 brings us into balance. If we take out 35.14, balance out and start pushing higher, then shorts are in trouble and all-time highs are on deck. Good luck, and I'll catch you tomorrow. Take care.